Tech earnings have been completely unbelievable after I've seen the data. And what I want to discuss in this video is the top 4 stocks that I'm buying in November. Because right now, between the Fed, between elections, and just going into the end of the year, there's a lot of opportunity to make money. So I'm going to show you 4 different stocks that I'm looking at where I see an opportunity to trade options with. There's some serious money that we can make with my strategies, and I don't want you to miss any of these. Let's jump right into it. The first stock I'm going to be covering, which I haven't covered for a very long time, is actually NIO. So NIO is a stock that is in the EV space. I used to cover this stock a lot. I made a lot of money with this stock, and then I ended up selling it, and I've actually got out of this stock for a profit. It's been a very volatile stock, and now that the stock has pulled back tremendously, I want to give you guys an opportunity to make money on this stock. Now remember, you don't actually need a stock to have a whole lot of direction to make money with my option strategy. Oftentimes we can print cash even the stock doesn't do too much. Now quickly, I want to go over NIO and why I'm bullish on it. I'm only semi-bullish on it, but the good news is the strategy that I'm going to tell you about actually requires the stock to be semi-bullish. I don't need the stock to go up a lot to make a lot of money. So let me explain. All right. So first of all, NIO, they have a growing EV market in China. The EV market in China is booming, and there's specifically, if you take a look at the economic difference between EVs versus the gas and diesel, etc., EVs just have an economic advantage, right? They're cheaper to get in, and also just looking at NIO, they have an innovative battery swapping model. So this innovative battery swapping model, although it can take a little bit longer to swap that battery versus going to a gas station, if you look at the overall time that it requires to actually get energy into the car and actually be able to drive a specific distance, it is actually much better than Tesla, because Tesla still takes a lot of time to charge, whereas a battery swap gives you a whole lot of range, okay? So they have a very innovative model, not to mention they are expanding into Europe. So just looking into expansion, I'm actually really bullish because I'm in Eastern Europe at the moment, which is where my roots are from. And I do see a lot of Chinese vehicles here. There's a lot of Chinese vehicles coming onto the market, and I do see some consumers starting to switch to these vehicles. So I'm very bullish actually on China in the long term. In the short term, I would say that it can be a hit or miss. However, let me show you the option strategy that I'm going to use on NIO. So my portfolio is still hovering right around the $3.667 million range, and I'm looking to get this portfolio to $4 million in the next couple of months. So if you want to be part of that journey, you want to be part of my challenge, then just go ahead, click the first link in the description, and you can learn more about my challenge, my Discord community, and most importantly, my one-on-one coaching, where I'm giving you myself, which is is like the best, right? So let me go into NIO right now, and let's take a look at some of the options. Specifically, NIO is just going sideways, which is actually a really good pattern. A lot of people mistaken sideways action as bad. No, it's actually really, really good. And I'm going to show you several different option strategies that you can run right here. Very simple option strategies where you can make a lot of money, take advantage of what's happening with election, what's happening with the growth and momentum in the market. For example, we'll cover Google. Absolutely lots of money to be made, a lot of money. So we're making money hand over fist, or a bicep over tricep. We're staying active here, and we're trying to make as much money as possible safely. Remember, I'm all about safe passive income. I'm not about taking on excessive risk, okay? So what you have to consider with NIO, the stock's at around $5 per share. And yes, let me point out, I'm not one of the guys that's just going to hype you up and say, oh, we're going to make money to the moon. You also have to be aware of the risks. Look, before I give you this play on NIO and the other 3 plays that I got, China's economic challenges, okay? They have challenges with real estate. They have a struggling and slowing consumer spend, okay? Their birth rates have come down quite a lot, okay? So I think this is going to impact NIO's domestic sales. It will impact NIO's domestic sales. But again, I don't need this stock to go up a lot because I'm looking at aggressively. And when I say aggressively, when I aggressively sell options, this actually means safety, okay? Let me explain this little nuance right here. Let's go to the example. So I'm going to go to trade NIO options. Specifically, what I want to do is a covered call, an in-the-money covered call, okay? I did have a video on this, so I will link that video at the end of this video. An in-the-money covered call, I will explain to you now, but just wait till the end of the video. You can see more about it if you still have questions. So look, an in-the-money covered call essentially is going to look like this. You first have to buy 100 shares of NIO. That's $5 stock. I mean, it's only going to cost you 500. That's a very, very low amount, okay? You can put a very small amount of money here, and then you can start selling covered calls. All right, so here's what you would do. You would sell a $5 covered call. Now, let me go for an expiration date that is December 20th. I think this is a really interesting strategy. Very, very interesting to make high income at a very safe way. So look, I'm going to go for the $5 strike. This is a $66 premium. So there's a few things to note here. $66 is actually about 12% return in 47 days. So this is about 6 weeks, and this is about a 12% return, which means 2% return basically a week. 2% a week is a ridiculously high return. This is a way to collect a lot of income, okay? Now, also, why is this safe, and specifically, why is this safer than going for an out of the money option? Let me explain. If you go for out of the money options, which I typically recommend, I'm giving you a little bit of a different way to do covered calls right now. If you were to do a covered call out of the money, you get a lot of good upside, and you get some margin of safety, because when you collect the premium, right here it's $66, you get to collect premium. It actually reduces your average cost. So if you were to buy 100 shares right now, you would spend $510, but we're collecting $66. So that would reduce us down by $66, which would be about $4.56 thereabout, right? So $4.50 or so. So at $4.50, you actually get a really good discount. You get a really good discount because the stock is trading at $5.10. But because you're selling a covered call, which is in the money, if the stock goes down, you're completely protected. Not completely protected, you're protected down to that mark that I mentioned, which would be the $4.56 or so, right? So at that point, or $4.54 actually, that's the correct number. If it goes down to $4.70, you don't care at all. You could care less. That's actually even a good thing. It's actually a fantastic thing, because let me give you 3 scenarios. If it goes up, okay, cool, no problem. You make 12% in 6 weeks. If it stays the same, that's fine. You make 12% in 6 weeks. Now, if it goes down to say $5, you don't care. If it goes below $5, you're actually good, because you get to keep your shares, and now your covered call is out of the money. It's below 5, so when it expires, you don't lose your shares, and you still get all the premium. You get the premium no matter what. But if it's above $5, which it's already starting at $5.10, this is a way to basically generate quick money, like fast cash, but you're definitely going to lose your shares if it's above $5 at expiration, right? So at December 20th, you're going to lose your shares because it's above $5 and the person's going to exercise. That's not a bad thing, but you will lose your shares. You are putting in capital, and then that capital will be basically used, and then you'll get it all back, right? So you'll put up $510, you'll get paid the $66 here in this example. Basically, you're putting up $450, and you're going to make about you're going to make about $66, so, or about $50. So you put in $450, you get $500. So you $450 you put in, and then $500 you come out, essentially, more along those lines, okay? And then you can just rotate this every 6 weeks, okay? So I think this is a really smart strategy for NVIDIA, specifically growing EV market in China. Yes, we have some problems in China for sure, and that's why I backed away from NIO, which was a genius move, okay? Some of you guys watch my videos on NIO and you say, well, Henry had a tough time with NIO. No, I did not have a tough time in NIO. It just looks like I had a tough time on NIO on some of my old videos because there was a lot of volatility. My Discord members have been very profitable on NIO throughout history, right? I'm not gonna say we have a 100% win rate. And to be frank, I don't even think win rate is what's important. What's important is how much money and what percentage return you have every single month. Is your net worth rising? And is your income suitable to basically help you retire and meet your spending needs, right? If those 2 things are true, I could care less what the win rate is. The win rate can be 82%, it could be 91%, it could be 62%. But if you have a good return for a good level of risk, at the end of the month, at the end of the day, at the end of the month, you have an $8K gain, $8,500 gain, $12,000 gain, we're good, right? I'm not gonna go after definitions, all right? That's the first stock, right? The second stock that I want to cover, and this is also a stock that I recently covered in my last video on November 1st, where I went over my live trading. Here's the video, by the way, on the live trading that I did. Watch Millionaire Trader Sell Puts live. This is a really important video. I'm not sure why a lot of you guys missed it, and we only have 16,000 views out of our 300,000 subscribers. You guys should really check out this video because I show examples, and basically I traded SoFi. And the next stock on this list is SoFi. I'm going to show you what SoFi looks like on the chart because I think this is really important. SoFi specifically is a very good company and it has a unique fintech advantage, okay? What I mean by that is they have a unique fintech ecosystem. All right, I'm going to look at my notes here. So I wrote here, unlike many fintech competitors, SoFi offers a comprehensive suite of financial products, okay? This basically allows it to benefit from cross-selling and high customer retention, okay? That's really important. High customer retention and cross-selling makes a lot more money. When you have a better relationship, which is, by the way, this is the whole reason I started one-on-one coaching. I see a lot of option gurus coming onto YouTube. They're kind of copying me. And I have proof that they're basically making the same videos as me. That's why I decided to go one-on-one coaching, because I actually want to build a better relationship with you personally, one-to-one. I'm independent. I don't promote anybody else. I don't promote any sponsors, and I don't promote any other YouTubers. Quite frankly, I've been doing this for 10 years. I'm saying this because I think really deeply about customer experience. And when I invest in companies, I think about the same way I deliver my coaching as a coach. I want to make sure that I deliver the best level of experience. And that is true for SoFi. I'm always looking for a company that has brand that can also deliver the best customer service, because what happens is when you deliver a good customer experience and someone gets results in terms of my coaching, or with SoFi, when someone has a good experience with their mobile banking, they don't have to look elsewhere. They get everything in one platform, in one ecosystem. That's exactly what SoFi does, which is why I start to really like this stock. And this stock has basically gone off to the moon a lot. I mean, this stock went from a $6 stock to $11 per share stock. This stock has almost doubled, and that's because what they're doing for their customers is phenomenal. They're actually focusing on the experience. I also believe when you do a good job as a company, as a business owner, that will foster to customer loyalty and long-term relationships. Long-term relationships equals money. Point blank. That is the most important thing. So when I'm looking at investing in SoFi, I think that this stock can be a $20 stock. You know, I'm buying it in November, but I think it can be a $20 stock in 2025 and beyond. So by the end of 2025 or early 2026, this stock, if it's at $20, will essentially be a double. So I'm going to show you the option strategy that I personally would run on SoFi right now. I do have a couple of positions on SoFi, but I'm also going to be looking at using the poor man's covered call strategy, or the leap strategy. Okay, let me show you what that looks like. All right, so I'm up a little bit of money here on SoFi. Here's what the leap strategy would look like. You buy a call option. Okay, you go out far in terms of dates. All right, so we'll go out to September 19, 2025. I would buy right at the money, right around $10. So if you buy at $10, this is a 70 delta. That is beautiful. 70 delta gives you that exposure, gives you that advantage versus buying the stock, because if you buy the stock, well, you'll have to put up about $1,000. But if you just buy a leap option, it's only $315 to control 100 shares. So now if I go to sell, all right, and I go to sell, I can sell something like January, and I can sell something like the $12 strike. If I go to expand here, you can see that's a 43 delta. It's a little bit high, but the bid-ask spread is amazing. And you can see that if SoFi has a bullish move in the short term, which I think will be slightly bullish. Again, this video is about being slightly bullish. I'm not a mega bull right now. I'm slightly bullish that I think the market will continue to run positively, okay? And because it'll run positively, you can make $100 here, $100 or so, if this leap option were to go to around $12 per share. You would actually make probably even more than that, because essentially going from 11 to 12 is already $100 on the leap option itself. And then if the $12 covered call expires out of the money, you've essentially made $75 right here on the premium. And then on the call option rising, you'd make about another $1. So you can make a really good return on SoFi every 2 to 3 months by doing the poor man's covered call strategy. The next stock I want to talk about, and this is a little bit controversial. A lot of people had some backlash to me, but I ended up making tremendous amounts of money, is going to be Snapchat. Okay, Snapchat, let's look at the year-to-date return on Snapchat. This stock has had a lot of volatility. I started recommending Snapchat, I don't know, actually, let me look at my history, because I want to be honest with you guys. So it looks like I started trading it around October, so not that long ago. Around October, so right here. Well, actually, yeah, that was last month only. So yeah, I've been trading it very recently. So I've avoided this huge crash and then this huge rise, luckily, because I don't like a lot of volatility. But now that the stock has stabilized around $10 per share, I see a really big bull run in Snapchat. Specifically, I think social media in general is growing a lot. Short form content is growing. And you will also notice, or if you look into Snapchat a little bit further, they're dominating on the younger demographic. Although this isn't really that fantastic at the moment, right? Because you can't capitalize a whole lot on the younger generation yet. They don't have a high income. I believe that Snapchat will start to make a lot more money with ads in the next few years, right? Ad dollars are increasing, and obviously kids and like younger generation, they don't have as much money, but they will have money. So that's the most important thing. So what I would do with Snapchat is I would straight up just sell some put options and look for a good entry into Snapchat. So you can sell something like, if I go to December 20th, I can sell the 10, or I can sell the, you know what, let's actually take a look at both. If I would look at the 10 strike, the delta here is just way too low, which is kind of what I assumed. 21 delta is also pretty low, but look, the return is not that bad. For a good entry, you can collect $32. You collect $32, and then you have a decent entry into Snapchat. Now, if it hits $11, then you can just run the wheel strategy, which I have a lot of videos on. You can check out the wheel strategy, Invest with Henry here on this channel. I have a lot of wheel strategy, but I would essentially just sell puts to get into Snapchat. Now, the last stock that I want to talk about in this video is going to be Google. Because of tech earnings, I think that Google is going to rise. It already did rise after tech earnings. We made a load of money. It doesn't look like it because it's only up 2.5%, but I actually was able to catch Google at a really good price. So I've been buying shares. I've been looking for entry for a long time. And the swing from basically 150, 155 up to 170 has been a $15 swing. And, you know, just having 100 shares has been very profitable. So you can see right now that I have 170 puts, which basically I would highly recommend that if you have a portfolio that can sell puts, if you have, you know, 30K, 40K, you know, or more, or six figures, easily you should be selling puts on Google. And I currently have sold the 170 put on Google, 5 contracts of that.